Hi everyone and welcome to this live stream from Exness. I'm Michael Stark, Financial Content Leader at Exness, and in this stream I'm going to be going over some of the analytical tools that we have available at Exness, looking at a fundamental overview of what's been happening recently and some of the important events that are coming up within the next few days and the next few weeks, and then also looking at some interesting charts from a technical perspective, and hopefully throughout the live stream and also at the end looking at any questions, comments, feedback that you might have that are about analysis. So please, by all means, do drop your comments. I have the chat in front of me here, so please leave a comment, ask a question, request whichever instrument you might like to be analysed, and that's something that we can very easily do, and it makes the session a lot more engaging, a lot more fun, and also I think makes it also more worthwhile that you be here. So without further ado, let's begin. Please remember before we begin though that nothing here is a recommendation or advice to trade or to invest into anything. And remember that when we are looking at the trading account, this is a demo account. It's not a recommendation for you to copy what I am doing on the demo account. These are just some ideas. It's not meant to be live trading. You should always manage risk and make your own decisions, do your own research. Hello Joyce. Joyce says, hello Michael, streaming from Nairobi, Kenya. Welcome Joyce to the stream. Hopefully have a good stream, and if you think of any questions then by all means that would be great to answer them. So first let's look at the personal area in Exness and remind you that this is a demo account that we're looking at here. It's not a live account. And if you go to the tab on analytics on the left hand side of the screen, under the personal area you can see analyst views, which gives you a few ideas, not signals but ideas for trades that you can check out and you can possibly use or at least consider. And we also have market news here, which is a feed whenever it feels like loading, summarizing all of the most important news and some less important news as well that's been happening recently and which is coming up soon. And you can also access from here, from this tab analytics, you can access the economic calendar. So the economic calendar from Exness is one source for some of the events that are coming up shortly and events which have happened recently. We're going to be looking in this particular presentation, we're going to be looking a little bit more closely at trading economics' calendar for a couple of reasons. Primarily the fact that we want to consider the context in terms of what's happened with the releases previously, and we also want to look at some of the possibilities for what's coming up in the near future. So that's part of the reason for preferring that. Laja Williams says, hello, I'm streaming from Nigeria. Welcome, Laja. Thank you for joining us. I have a question on how the Exness Partners program works and how I can make my first profit. I would just ask, please, Laja, can we wait until the end and we can discuss that, because this stream is about live analysis. It's not about partnership. And partnership is also not really my area. It's something that we could look into, but it's not something that is the central point of this stream. So let's cover some analysis first, and then we can, if we have time, we can move on to that question later. But thank you very much for asking a question. So some of the key events that we're looking at for this week for most markets is the minutes from the Fed's latest meeting. We're also looking at a German balance of trade. We're looking at the Canadian job report. Those are some of the most important releases that we're looking at in this particular week. And then also looking into next week briefly, very important, I think, to watch Chinese balance of trade and exports and imports. These are going to be key releases next week. And also before next week's stream, we're also looking at the British job report. And then coming up, the key release that's coming up a little bit further ahead is next week's American inflation. That's really, really important release because it probably has a significant impact, at least to some degree of impact, on what the Fed is going to be doing in terms of rates in the latter part of the year, in the next couple of months. So let's just look at these very quickly in turn. FOMC minutes in itself is probably not that likely to bring too much in terms of volatility or in terms of possible direction for different instruments, because it seems to be pretty likely that we're going to have the Fed calling for another 2 cuts this year. That seems to be something that's more or less definitely priced in. So if we just look briefly at what's likely for the 29th of October, which is coming up relatively soon, in just about 3 weeks, seems to be almost certain that there's going to be another cut by the Fed then. And that's important because if we look back to around this time last month or slightly earlier, it was considered to be very, very unlikely that we would actually get 3 cuts in the rest of the year. And now it seems like we will get 3 cuts from September to December. Since if we look at the possibilities or the probabilities for the meeting in December, we've got around an 80% chance of there being another cut then as well. And that has overall slightly increased compared to last week. Overall, the chance of 3 cuts is slightly higher, whereas the chance of another cut this month is slightly lower than it had been a week ago, but it's still very, very large majority. That's certainly the favoured outcome. So it seems to be kind of unlikely that we would get any significant kind of intrigue from the FOMC's minutes. That's probably more likely to come from the Fed's meeting, which is coming up on the 29th of October. Welcome, JPA watching live from Malawi. Welcome. And Oluwa Pizzi asks, what's your take on US oil and pound franc? Yeah, we'll definitely look at that. We will look into these 2 symbols. Let's just do a little bit of fundamental analysis first, and then we can move on. We can definitely talk about these 2 symbols within just a few minutes. Yeah, and thank you, Mr. Oluwa, for the question. So I also wanted to look briefly at what's coming up on Thursday, German balance of trade. Usually not really a super important release, balance of trade from Germany, since, I mean, most of the time, or pretty much all of the time, with some rare exceptions, it's going to be positive and usually fairly strongly positive, unless there's something very unusual happening. So we're not expecting any significant surprise from this, pretty much in line with the seasonal norm, about 15.2 billion euros. Probably there won't be a very big surprise this way or that. That's something that, relatively speaking, has a lot less potential to move markets, I think, compared to current political developments. Because I've been watching in the last few days, particularly yesterday, the resignation over the weekend of the French Prime Minister is something that generates significant political instability in France. There aren't very many obviously good options for President Macron to restore some kind of stability, and that has certainly been something that's affecting the euro. And we'll look a little bit more at the chart of the euro in a minute. And we've also been watching the election of the first female leader of the Liberal Democratic Party in Japan. So that's something that's potentially significant also for the yen and for various Japanese instruments, not least the Nikkei 225. So I'll be looking at that also shortly in just a few minutes. So for this week, it's not a hugely big week of data, not hugely important week of data. Some releases, but none of them are necessarily going to be really major or really very influential on markets. So that's why I think to some extent for major instruments, we might see more of an influence possibly from politics, and we might also see a bit more of an influence from tariffs and trade news. And particularly the negotiations which are ongoing between Israel and Hamas happening in Egypt over the next couple of days. And to some extent, of course, the Canadian job report is something potentially important. It's just not necessarily a main figure that we're watching for the most important instruments. So I just briefly, let's just briefly talk about oil, because we had a request from, I think it was Oluwa. Yes, Oluwa was asking about oil. So I think part of the reason for the negativity currently, despite the fact that, generally we have significant or fairly significant draws in American stocks, is that OPEC seems to be quite committed to pumping more, and we have at least moderately negative outlook for demand. I mean, not really negative, just we certainly don't have a very positive outlook for demand, let's put it that way. With trade wars, with some degree of economic headwinds compared to like this time last year, for example, in many countries, then that's why I think there's a degree of negativity there on oil. And we can also look in more detail at OPEC shortly. I just want to briefly, before we move on to potentially look at some charts, I just wanted to look briefly at next week's inflation data from the USA. Because I think it's quite important that if we're looking at headline inflation, and we're expecting currently, there's some possibility, at least based on Trading Economics' forecast, that this is going to be moving up to 3% from the current 2.9%. So if we're just looking purely at this, we're only looking at American inflation and we're not thinking about anything else for now, then it seems to be kind of questionable whether the Fed can be cutting rates twice more this year. Because you would usually expect when a central bank is going through a cycle of tightening or a cycle of loosening rates, we have a fairly consistent trend in inflation. To tighten rates, you would expect inflation to be going up. To loosen rates, you'd usually expect inflation to be going down. But the fact that the opposite is happening in itself would make things kind of questionable. Why are rates being cut when we're likely to get inflation, or it seems at least possible, let's say, that we're going to get inflation moving back to 3% towards the rest of the year. And part of that certainly is the NFP. We've had generally pretty negative NFPs over the last several months, significantly worse than expected, and that contributes significantly to the impression that we're going to see some considerable negativity in overall growth in GDP from jobs for last quarter. So that's something important to watch out for. And one of the kind of disappointments from last week, it's obviously not great for loads of things that the US government has shut down. That's true. But also it would have been really useful, I think, to have had this NFP for September, just to see, is this actually part of a pattern? Do we have some kind of consistent pattern of jobs consistently getting weaker, labour market getting weaker, that possibly the Fed can run with to cut rates? Or could it possibly have been better than expected? Which I think is kind of possible. For an individual NFP to come in higher or lower is quite possible regardless what the trend is. But now we have to wait, provisionally at least it's rescheduled for the 7th of November, so we have to wait and see what's going to happen with that. Let's see what happens there. But that's a very, very important release to watch. And I think another really critical release that we would like to be watching, or I would certainly like to be watching later this month, is advanced GDP. So we want to go quite far down here, to the 30th, I think it's on, right? Yeah. Just to see how is that going to change. Because I was expecting that GDP for the third quarter, although GDP for the third quarter was revised up twice, I certainly wasn't expecting it to be revised up that far. 3.8% is really quite strong considering the circumstances. It's unlikely we're going to get something like that again for the third quarter compared to what it was like in the second quarter. And yet, it seems to be maybe questionable whether we're going to get also exactly 1%. It might well be higher or lower than that. So I think that's a critical release that I'm really looking forward to see if we can get a better idea of the longer term direction for the American economy, for the Fed, really critical factors, and also potentially for stock markets as well. Depending upon what direction this surprises. So hopefully we're going to be analysing that a lot over the next few weeks. So you'll join us for some live streams and more discussion about that. So I just wanted to look briefly at earnings. Part of the reason for, relatively speaking, we've had some pretty positive, generally pretty positive performance for many major indices is that earnings overall have been pretty positive recently. So I actually just want to go to previous month here for a moment. In that many of the tech shares that were reporting last month from the USA were at least moderately positive. Some of them not quite meeting the consensus, but at least doing better than they have been doing previously. And that's one factor that certainly I think seems to have supported indices, especially tech-heavy indices. And I think what we want to continue watching this month is that trend actually going to be continuing. Since we don't really have the start of earnings season proper in the USA until 14th of October, so that's next week. It's a week today, and as usual, the banks, major banks, are going to be starting earnings season. So I think we want to see how are they responding. How is their EPS at least responding to the Fed more likely to cut rates? And overall, the environment where people are still, to some extent, at least expecting a recession or economic downturn. So that's something that we want to. That's something that I want to be monitoring quite closely, and I'm sure Andreas will be talking a bit more about earnings next week. So I think that's probably about it for the main fundamentals. I just briefly want to look into bonds because the current situation that we have of very likely to be further cuts in rates in the USA Usually we would be expecting, like over the equivalent kind of period that these expectations have changed, we would be expecting probably the rates, the yields from the 10-year bonds to be going down. And they're not really doing that consistently. They're not going up, that's true. They're also not going up, but they're not going down. So, I mean, it's questionable, I think, whether there's any clear signal here. But I mean, it's not something necessarily that we're looking at very closely right now. And for France, I mean, the way that the French bonds have been reacting, let's bring a slightly smaller time frame there. It seems to be like pretty normal in the sense that we have had this prime minister who has resigned over the weekend because he can't get the budget passed. And there is quite a big budget deficit, and the cost of servicing this debt is very high compared to other broadly equivalent countries such as, let's say, Germany. So maybe you might expect more of a crisis in bond markets, crisis inverted commas. I mean, in bond markets and the yield to spike more significantly than that. The fact that it hasn't, I think that maybe indicates some confidence in markets that, I mean, there will be some solution to this. There isn't necessarily going to be a major crisis in terms of debt to GDP or anything like that. So let's see. Let's see how that pans out. A couple of questions. A couple of comments here. So Kelvin says, watching live from Ghana. Thanks, Mr. Kelvin. Welcome. Lucas also says hello from Namibia. Hello back to you, and thank you for joining the stream. So let's look a little bit at some charts. I think we could probably start with gold, just because this is something that right now it's very difficult really to find a good entry, in my opinion. I would just stress that throughout this whole section, when we're looking at charts, this is just my opinion. This is not a fact or a law or anything like that. It's not a recommendation for you to trade. It's not a signal. It's just me giving some opinions. I'm just saying what I think about the situation. It's very difficult for me personally to find a good place to buy in more. Because we've had this long established uptrend, and because it's been overbought for such a long time, and we have some quite strong fundamental factors backing that up. Of course, not least, we have somewhat intensifying trade wars with some new tariffs being announced here and there. And we also have significantly higher expectations that the Fed is going to be more dovish. It's going to cut 3 times in total for the rest of the year. So that's quite an important factor that we're looking at there. And I think we also want to be mindful of the possibility that it could just retreat once it reaches 4,000, which sooner or later it's quite likely to do. It's quite likely to reach 4,000. So in that situation, one of the ways that I think we might plan for, or I personally might plan, is to consider short-term sell around the area of 4,000, because that's really such a strong psychological area. And it's quite likely to be a resistance. There's likely to be like some degree of movement downward from there. Be prepared for that, while also being prepared for if there's a strong sign of upward momentum. Of course, possibly not doing that. Depends on the circumstances. And I think possibly Fibonacci can be quite useful here. I mean, exactly where we start to draw it, I mean, is a matter of opinion, of course. But I think we could probably look all the way back at 2022. And I mean, where I would probably put the end point of that on the monthly chart might be somewhere around the highs in 2024. So on that basis, and if we can also fiddle with it and we can add the extension in the other direction, then that's something that possibly can help us to get what we want. Can help us to understand a little bit more about where possibly the price might be going. And also in reverse. Yeah, we also want to do that in reverse. So, I mean, for now, like for the price to move down to any of these areas is extremely unlikely, of course. But if we were to take this one, let's actually do it the other way around. Maybe with a weekly chart might be a little bit easier than that. Because I haven't clicked twice. Yeah, I'm sorry. So take something like this, and we've got maybe a little bit too many areas here, of course. But if we look, there's various different areas around the highs that we had previously. The previous highs that we had from April, May, and the early part of June. Seems like it's possible for the price to make some degree of consolidation around there. if there's a retreat from the current highs. I just think the main problem here really is, for me, buying in something when it's really this high increases the risk quite significantly. Better to buy lower. And if I was a new buyer, I would probably wait for it to bounce off 4,000 in the belief that probably it's going to retrace from 4,000, and then set up a buy limit, possibly in the area of around 3,900. Just not sure I would do that necessarily now. It's quite a difficult situation, and sometimes it's okay, I think, for me at least, to admit, okay, I haven't quite got the right place for this year. Whereas with Bitcoin, I think it maybe, at least provisionally, seems to be somewhat clearer, in that it's reached a new all-time closing high, based on Exness's platform at least. It's reached a new all-time closing high, just shy of 125,000. But since I don't really see any obvious change in the fundamentals, that's why I would probably be inclined to look for it to move a little bit lower. And I mean, I'm just kind of spitballing here by drawing this channel. Obviously, this is not a very precisely drawn channel, as you can see. But still, I mean, it's a rough area, potentially, that we might be able to use. So assuming the price does, at some point, retreat from this high, doesn't have any obvious catalyst to push much higher that I can see currently, then maybe we might sell, and we consider a target around what seems to be fairly strong support, around 107 to 109-ish approximately. So that's one option. Whereas what are the conditions required for Bitcoin to break out, I think is kind of less clear. Because over the time that we've had gold making this really strong round of gains, and we've had significantly greater likelihood of hawkishness in American monetary policy, then Bitcoin has not made such a sustained period of gains. That's one important factor, I think, to consider. So what would make it do that now when we don't have a new catalyst, at least from monetary policy? That's one question. Of course, we should be prepared, I think, for it to break above. I just think the more likely scenario for now is for consolidation, possibly some retracement lower. But of course, let's see how that actually plays out. Yes, so we've had some analysis. Joyce requests analysis on gold, Bitcoin, and US 30. Yes, thanks for the request, Joyce. We can look into more details on gold and Bitcoin if you would like to. And US 30, yep, we can certainly cover that. Let's just go back very quickly to Oluwa's question about US oil and pound franc. We'll look at those two. Sorry, let me just do that for a second. Right, so let's look at US oil first. And I think the overall context is like kind of broadly negative, because as we were discussing earlier about the fundamental perspective on oil, we have increasing supply from OPEC, and we have likely at least somewhat weaker demand compared to what the expectations had been roughly around this time last year, or possibly a little bit before that as well. So that's why broadly, based just on the overall supply and demand, I think we have some degree of negativity for crude oil, right? And on the chart, we can also see overall we probably have a downtrend. I mean, if I'm taking it from the start being maybe around June-ish, this is around the 12-day war between Israel and Iran in mid to late June. That's the start, I would say, probably of a new phase of this downtrend. And if we take a very high time frame, maybe a month is a little bit too high. Let's take a weekly chart. Then we can see that overall, it seems to be broadly in a downtrend, starting from 2022. Although, of course, I would stress that's a very high time frame. For the moment, though, I think perhaps it might be more likely that the price could continue to bounce. It's just that right now we don't have any obvious evidence of there being much momentum to that. Because right now we are oversold based on the slow stochastic. So that might make it possible for the price to move up. It's just we can see that these candlesticks are very small on the daily chart, so it's kind of questionable to what extent it's going to be moving up. And also I think it's questionable to what extent we have a catalyst for it to do that this week, since we don't have any like really major top important news that's going to be affecting oil. It's a while until OPEC's next meeting. Yet equally, I mean, it looks like there's certainly little demand to push much below 60-ish. This is American light oil that we're looking at. So if we take, for example, if we just look at this gap that we had over the weekend between the 3rd of October and the 5th of October, then the gap is quite big. It's relatively quite a big weekend gap. And usually when you have a gap up like that, then that might, and it's not closed, importantly, it's not closed within a couple of sessions after that, then we might suggest that that direction could continue. So for me, at least in the short term, probably buying might seem to be more favourable. I just try to avoid setting a very aggressive target. 65 should seem to me to be maybe a little bit too aggressive a target, since that seems like, yes, quite possibly a resistance, but that would be more like a stretch target. I think my initial target would be probably the area of around 62.70, 62.80. Just a little bit below the confluence of this 20 SMA, which is in white, and the 50 SMA from bands, which is in green. So it might seem, I think, more likely to see the price moving up to there, initially, at least. And what else was Alu also asked for? Pound franc. Yeah, that's an interesting one. That's not something that we look at very often, but so let's look at it. Yeah. So for pound franc, not any very obvious trend here, really. We need to, I think, zoom out to consider what kind of trend are we in, and I would probably argue that we don't have any overall trend, and I would just say that last time I was looking at this anyway, I was thinking it's probably quite unlikely that it's going to push much below 106.5. Just basing that on currently the demand for gold as a haven is very high. That's of course true. Gold is very high demand as a haven, whereas the franc and yen not so much. There's not that much demand for them as havens. And the influence from monetary policy in this particular case is not really all that high. In that, yes, there's quite high rates that apply to pound sterling and probably likely to continue applying to the pound sterling for a while. I'm just not sure that's necessarily a very big factor. It's not traditionally one of the main instruments we might use for the carry trade, pound franc. So my assumption would be it's pretty unlikely for it to push much below 106.5. I think that seems to be kind of questionable because it's tested that approximate area several times and hasn't managed to break through. So usually we assume that the second and the subsequent tests are going to be weaker, and it's more likely to not necessarily take the opposite, not necessarily for the trend to reverse, but possibly for there to be a consolidation, possibly more of a sideways trend compared to recently on the lower time frames. At least you've had a downtrend rather than a sideways trend. Let's put that back on auto, yes. So what would be the initial target if I was going to be buying this? I would probably look for the value area between the 50 and the 100 SMAs because it's just kind of obvious, around 108ish, and that's where we had some highs from last month, from September. So that seems to be kind of a possible area maybe for resistance, although it's certainly not by any means confirmed yet. And then further above that, I think the obvious next potential resistance would be August highs, which is roughly around 109. It's just we have quite a long way, especially for a major forex player like this. You know, you're moving up more than 2 centimes here, so it might take a while to do that when we compare with how long it's taken for it to move 2 centimes from August highs down to around here. So I think that's just one factor that's quite important. And I would also look at just want to look briefly at the British job report, because that's coming up next week, and that's actually a pretty important release, just to see what's happening here, you know, in that recently we've had some generally quite positive claimant count changes, broadly speaking, considering the circumstances, fairly positive claimant count changes, certainly compared to the USA. And what's going to happen next week, of course, this is notoriously very, very difficult release to predict, claimant count change in the UK, but it's something that I think is great to have or for me at least, have my fingers ready on the keys and on the mouse around the time of the release, and compare with the charts and see how is this surprise being reacted to. Because it's very, very unlikely for it to be very close to the consensus. It's almost always quite divergent from the consensus. So that's an important factor, I think, to be watching. Monetary policy, less so. Significantly less important factor to be watching for pound franc. So, I mean, my personal bias would be probably more towards buying. I just don't think that I would recommend anybody to actually do that. I would not recommend anybody do anything. That's just my personal opinion. So, I mean, how I would maybe set that up would be I would try to find a reasonably good ratio, which here I would concede is difficult to find a good ratio. We need to leave some amount of space for the price to move. So you could probably set a stop around 106 approximately. Around 106.4, let's be specific here. Around 106.4. And my initial target, I think, would be around 108. So set it around 108. And we don't have a very good ratio there at all. It's really not a good ratio at all. It's only very slightly above 1 to 1. Whereas if we set the stretch target initially, let's call it 109.2 approximately, then we've got a significantly better ratio. I just think I might be in that trade for some time before it actually were to hit that target, if it does hit it. So, I mean, for lots of different reasons, I'm personally not mad on that. Remember, this is not a recommendation to trade. This is just for informational purposes and opinion sharing. Not a signal, not a recommendation to trade. Just one illustration of how it can be done. Kelvin Mensa says, why is there a big jump in the dollar yen? That's a good question. Let's talk about that. But first, let's just come back to Joyce's question about the Dow. And we want to look at that. Sorry, I don't want to type it down. I want to type in US 30. So, like various other indices, it's chugged along quite happily most of the summer. Since we don't have any significant obvious headwinds apart from jobs in the USA, inflation is fairly high. GDP has actually been really quite strong. Many of the constituent companies are doing absolutely fine. Thank you very much. And in most cases, the tariffs, increases in costs as a result of tariffs, can be passed on to consumers. Not really that much of an issue. And I mean, technically, it's an index. It's not really doing anything very interesting, I would say. So, I mean, the opportunities to sell are usually on the lower time frames when you get some kind of momentum trade. I just think, like, it's quite risky to sell an index like this as a momentum trade when you don't have any significant news around, because how do you know when this movement is going to end on the lower time frames? Whereas now I think it's not really a terrible time to be buying. I would just probably prefer to wait for it to be a bit lower before I did it myself, because you're not actually right at the highs. We're not right all the way up at the all-time highs. It's retreated a little bit from there, but also I think it's kind of important to consider earnings season, as we mentioned earlier. And if we bring really high time frame, and let's see, like, where do we think it's going to go? I mean, the next, I think, kind of obvious biggish resistance is going to be about 48,000, followed by 50,000. Just might take a while for it to get there, because there's been some momentum here and there in summer. That's true. It's just usually we're not really expecting this period of the year to be very high momentum for most indices, and that includes the Dow, I think. So for me personally, as a trader of CFDs, this is not really all that interesting right now. As an investor, of course, yes, it remains interesting indices, but as a trader of CFDs, not really one of the interesting symbols to look at. Probably we'll be waiting for earnings season to kick off, see if there's any surprises there, see how sentiment is evolving on the Fed, and try to exploit any potential decline, maybe to the 20 SMA, maybe possibly even to the 50 SMA from bands. I just don't really see that being very likely to happen immediately. So I mean, looks like kind of broadly positive, like an index typically is. So we had the question from, so hopefully that answers your question, Joyce. If you have any further points, any specific things you'd like to ask about any of these instruments, by all means, please do go ahead. So a question from Kelvin Mensa, why is there a big jump in the dollar yen? One of the main reasons is the election of the new leader for the Liberal Democratic Party. Because the new leader, you can read a little bit more about this on various different news sites, doesn't have to be The Guardian. I just find The Guardian is kind of useful. Takeichi is kind of widely perceived as being more fiscally liberal, let's say, be more inclined for stimulus, be more inclined towards loose monetary policy, which is something, of course, that would be negative for the yen, while it's at the same time positive for Japanese shares. And most of the time, I mean, I wouldn't say it's like consistently reliable or something like that. It's not always reliable, but most of the time you get some degree of inverse correlation between a country's currency and its index. So if we see like a big gap up for the Nikkei 225 like this, and we can see the price of that as getting pretty close actually to, or maybe it has actually made recently a new all-time high. I mean, high of at least a very, very long time, yeah, let's say. Then you would usually expect dollar yen to be going up too. That usually holds true. I just think it's maybe a little bit more questionable. Who was it who asked that? Kelvin, right? Yeah. Just maybe a little bit more questionable, Mr. Kelvin, whether we're going to be reaching significant new highs for dollar yen, just because once we start getting this going much above 150, as we saw last year, there's going to be some sort of intervention by the Bank of Japan. I mean, not as soon as it goes above 150, no, but when we start seeing it get, towards 160-ish, then there's much more likely to get some kind of intervention from the Bank of Japan, or at least, commentary about we are watching the rates, etc., this sort of thing. So that's, I think, one important factor. And I think one caveat or one kind of counterpoint, let's say, to that is traders for the moment seem to be mostly discounting reasonably high probability that the Bank of Japan will hike its rate at the end of this month. Next meeting of the Bank of Japan is coming up on the 30th. So it's quite possible that we might see them hiking the rate to 0.75%. That's what we see now, anyway. And we just need to be, I think, aware of the possibility that quite possibly this is going to be pushed back. It's quite possibly going to be delayed. Maybe it's not going to be happening immediately. For that to be happening immediately this month, it might be happening after that. Right, so the other question, I think that covers that big jump in the dollar yen, yeah. And we also want to be monitoring the Fed, the Fed's meeting, which is coming up quite soon. It's coming up at the end of this month for what's going to be happening there. So if anybody else has anything else in particular they would like to analyse, please by all means ask a question, or anything else you would like to discuss in general, by all means ask a question. Let's look in the meantime at Eurodollar, quickly-ish. So we have some degree of negativity here because, as we discussed earlier, the resignation of the French Prime Minister, shortest-lived Prime Minister of France, in this republic, in the Fifth Republic. So that's something that's quite significant political instability that weighs to some degree on the euro. I just don't think that that's going to have a significant long-term impact necessarily. Because the overall trajectory, it seems like the overall trajectory is likely to be declining differential between the Eurozone and the USA. It's not likely to close for another year, I would guess, at least, but it's likely to continue declining. Since we saw at the ECB's last meeting, and the one before that, I would argue, some degree of signal that this current cycle is over, or at least paused. This cycle of loosening policy is over, or it's possibly paused. So whereas the Fed is certainly not. It can't possibly stop or pause for a long time at the current rates. Seems very likely that the Fed's going to keep cutting, several more cuts within the next 12 months. Possibly 3 or 4, maybe even more than that, depending upon other factors. So that's why, on that basis, based on what's going to be coming up in the future, I don't think it's too likely for the price to be moving in a sustained movement lower. And if there is a significant jump down, which I think is kind of questionable in the near future, because we don't have any very major events coming out until American inflation, which is going to be next week, then possibly there's going to be a cap of the losses around the recent low. It was a low from the very end of July, early August, around 114-ish. It doesn't seem to be too likely for the price to move below there. And also in the daily chart, I think it's important to see, how is the price actually interacting with the 100 SMA? It's currently testing it, just hasn't clearly broken through it yet. So let's see how that actually pans out. Is there actually going to be a close below there? It's not clear yet. Yeah. So hopefully that's should be reasonably clear for Eurodollar. Right. Question from Abraham Oatile. How often do you host live trading session? Well, we don't host live trading sessions, Mr. Abraham. We host live analysis and we host live discussion and questions, but we don't do live trading for different reasons. Live trading, we currently don't do that. But these live analysis sessions are once a week. This week it's me. Next week it should be my colleague Andreas. So it'd be great if you could join us every week. Happens at 8 o'clock GMT. And hopefully good session, opportunity to ask your questions. And thanks, Mr. Abraham, for your question. Bilal Mohammed says, I need analysis on Bitcoin, please. I think we did cover that, but let's just briefly go over again. I'll just briefly summarize what I think. I think there's very little, and thanks for the question, Bilal Mohammed. There's little that I can see catalyst for the price to be to continue going up. So I'm just roughly drawing this parallel channel and expecting that quite probably within the near future there might be some degree of retracement lower. Possibly it moves to the middle of the channel. Possibly it moves to the lower part of the channel. But certainly doesn't seem very likely to break lower than that. And I think we should just be aware of the possibility that it might break above 125,000, at least slightly. Part of the reason why I'm a little bit reluctant to commit to doing anything right now about this is that there just isn't really any clear catalyst for it to break to another new high now that I can see. Whereas what I would be wanting to watch is what's going to happen around inflation. You know, if we get American inflation next week going up to 3%, while the Fed is still likely to be cutting rates, then yeah, that might give some significant fuel to Bitcoin, or possibly even moving higher than that. I just, in the run-up to that particular event, I'm not really thinking very seriously about trading Bitcoin for now. I mean, but one possibility, and I would stress that this is not a recommendation to do this. This is just a possibility that I personally can see and might consider doing, is using a buy limit from the lower area of the channel, especially if it's confirmed. So that would be around 109-ish thousand. So that way, even if it doesn't make a new high, there's still the possibility with CFDs possibly to make a profit on that trade. And of course, if it doesn't go down that low, we don't have a trade in the first place. But I would stress that's not a recommendation. This is not live trading. That's just one possibility for if what I'm saying here, you might agree with it, having done your own research. And then the goodie says, where will market go? Could you specify, please, the goodies, which market you mean, which instrument you mean? And suppose that done, and yes, we can analyze whichever instrument you want, really, within reason. Some of them I don't know a lot about, I admit, but most of the major instruments we can analyze. That's no problem. So where are we at so far? Let's just do a quick recap of where we are at so far. In the meantime, if nobody has any immediate questions. This week we don't have any really super important data coming out. Canadian job report is to some degree important because we have, I think, generally like considerably more economic negativity in Canada compared to the USA. Some evidence of an even weaker job market in Canada compared to the USA as well. And I think let's actually look at that pair. Let's look at dollar loonie at least a little bit after this. Consumer sentiment, not super important release. And some releases which are to some degree important for relatively less important instruments. So like, German balance of trade, as we discussed. We're also, if you're trading Mexican peso, you obviously will be looking at Mexican inflation. Just many of us, of course, are not trading the peso usually. That's quite an exotic symbol. And we're looking ahead next week, or at least I'm looking ahead most closely next week to the British job report, which is happening on Tuesday, and looking ahead to American inflation, which is happening on Wednesday. And of course, Chinese balance of trade on Monday, very important release. But hopefully, Andreas next week on 14th of October, next Tuesday at the same time, 8 o'clock in the morning GMT. Andreas, my colleague, is going to be covering a lot more about American inflation, so we don't need to go too deep into that. So I just want to look at briefly dollar loonie here, since we have the Canadian job report coming up on Friday, and that possibly might give some more impetus or some more kind of catalyst to this. because despite the fact that the American overall, the situation for the American job market has got quite considerably weaker in the last few months, it seems to have got weaker still for Canada. Canada seems to have declined even further compared to the USA. So I think that's something important. That's something we want to be kind of monitoring and looking at. And we also want to see how does the price actually going to interact with 140. It's a pretty nice round number. Of course, on the way down, didn't really care very much at all about 140. I remember that happening in April. But on the way back up, it's quite possible it is going to care about 140 and what's going to be happening there. We just need to be aware, I think, if we're trading this, overbought based on slow stochastic, pretty strongly overbought, and very close to overbought also based on the Bollinger Bands. So, I mean, it seems to be, I think, maybe questionable whether we're going to have a significant ongoing uptrend for dollar loonie. But some of the factors that are behind it, I think, maybe could be we've had successive golden crosses. Firstly, we had the 20 over the 50 SMAs, then we had the 20 over the 100, then we also had the 50 over the 100, and it looks like soon we're going to be getting the 20 over the 200 SMA golden cross, which of course is that particular one, 20 over 200, very, very lagging signal, but it can help to confirm. Possible uptrend. And just also the counterpoint to that is ATR is very low. ATR was like only 0.003. Oh no, sorry, 0.004. So that's very low for a daily ATR, even for a major forex pair like this. Really, really low ATR. So I'm just not sure that's necessarily one of the better candidates for trading right now. It would be if we get a significant surprise from the Canadian job report. So that's one of the main releases actually that I personally would be looking at this week. Just aware that, of course, various people for different reasons, you might not want to trade the loonie. That's fine, of course. I just think that's one of the more important releases for if you're going to be trading the loonie. Yep. That's fine. Bello says thanks, and Kelvin says thank you. Yeah, that's fine. You're absolutely welcome. Thank you for asking the questions. Yeah. What's the driving? Kelvin Mensa also. Let's come back to Lysander Biela. Lysander Biela asks, can we look at Euro, Aussie dollar, DAX? That's interesting. Yes, we should have time to do that. But firstly, Kelvin Mensa says, please, what is the driving force for the CAD? Because the pound CAD and Euro CAD move anytime. Yeah, that's a great question, Mr. Kelvin. Thanks for the question. I mean, traditionally, of course, it's oil. As you probably know, traditionally, Canadian dollar has quite a strong correlation with oil. Nowadays, that's not always quite so reliable. Not always. And I think I personally would argue, let's say, and I would stress it's just my opinion, you don't need to agree with me, of course, if you don't want to. I think that the overall economic performance is probably more important over the last few months, the last few years. Because we can see that generally, Canadian economy has not performed fantastically. We can put it that way, over the last couple of years compared to the USA. I'm just comparing it to the USA here, right? In terms of GDP growth and also in terms of employment. This hasn't really performed very well at all compared to the USA, although, I mean, it's been roughly on par with various European countries. So this kind of contrast, I think, is very important. But I think if we look specifically at Euro loonie traditionally, I mean, before COVID, I'm thinking back to, when I was a new trader, traditionally Euro loonie was one of the relatively quite good pairs for the carry trade, since, pretty much always you're going to be getting higher rates of interest in Canada than you are in the Eurozone, of course, right? Whereas for the last several years, that categorically does not work. Like, EuroCAD, for me at least, is not a viable carry trade pair, except in some quite exceptional circumstances. So I think probably the main thing that we can be doing, what I personally am doing usually, Mr. Kelvin, good question, is considering the heat map, just looking at what's the overall economic performance of these countries in terms of GDP, in terms of inflation, and also monetary policy. And looking at the job market, also very, very important for Canada, I think. That's the summary of it. Yeah, so hopefully that answers your question to some degree. And then let's just briefly, because I know we're running a little bit late in terms of time. We're not running late, but we're about to, yeah. So let's just look at Lysander Biela's questions about Euro, Aussie dollar, and the DAX. Euro, Aussie dollar is not something that we usually look at very often. And we can consider it in terms of fundamentals, But I mean, for the moment, like my kind of instinct is there has been, I admit, a couple of weeks since I looked at this, but still nothing really has significantly changed on the chart. I still think that we're probably looking at about 176-ish for now as a possible support. Maybe it might be a bit higher than that now that we've got the 200 SMA a bit higher than there. And we're also looking at the latest high as, you know, being a possible area of resistance, which is around 181-ish. And where the main catalysts come from for this, I think, is probably trade. In that both of these, both the euro and the Australian dollar, are quite vulnerable to developments in terms of tariffs. Whereas right now, at least, politics certainly seems to be something a lot more negative for the euro than it is for the Aussie dollar. No significant political intrigues in Australia right now, I mean, compared to various other countries. So that's why I think, I mean, there's the possibility, at least, that the price might continue down in the short term and retest the latest low. But as for whether I would personally do that, I probably would not, because as we discussed earlier, when we were looking at the possibility for pound franc, it's just a little bit difficult here to find a very good ratio for me personally. If I'm trading on this time frame, I mean, I just think it would be quite hard to find a good ratio. So that's why my inclination would probably be to wait, see how it interacts with around 176-ish, and take it from there. But again, I would stress it's just my opinion. That's not like a law or something. And as we discussed, maybe it was a minute ago, maybe it wasn't, I'm not sure. Yeah, we discussed about EuroCAD, yeah. Carry trade potentially, I mean, traditionally would be something important here. But as for what the RBA is going to do in the rest of the year and early next year, I really don't know. Don't know what's going to happen there. Australian interest rates. That's, I think, a very good question, and that to me seems like a bit of an intrigue actually for trading the Aussie dollar. I'm not sure exactly what's going to happen with that, because there's a lot of uncertainty around inflation in Australia, I think, specifically, and there's also, I think, considerable uncertainty about trade and how that's going to affect interest rates. So let's see. Yeah. Let's also look at the other one. Lysander also asked for the DAX. So let's look at the DAX. And I don't think that the DAX, the broad situation, is necessarily very different from American indices. We just don't have such like an obvious ongoing strong uptrend. You know, earlier this year around Liberation Day and so on, we had like major movement of capital out of the USA. Yes. Whereas now I think we have some degree of movement of capital back towards the USA, or at least, you know, away to some degree from many European instruments. DAX just doesn't seem to be really all that interesting right now. So I would probably be expecting it to continue moving in a sideways trend for the time being until we get some kind of more significant developments in terms of monetary policy or in terms of politics. Or I think possibly another factor here for the DAX could be more saber rattling about Ukraine, because DAX recently has reacted generally pretty positively to when there's an uptick in military rhetoric, or there's an uptick in rhetoric about, oh, we need to rearm and so on and so forth, because of various defence constituents. So let's see how that plays out. But I mean, for the moment, I certainly would be looking. I would be looking at quite possibly it's going to stay in a roughly defined sideways channel. I would stress that's just quite a rough channel, barring any significant surprises from earnings or elsewhere. Yep. And then let's just look at one more question, and then I just have a few things I need to say at the end. Joyce says, how does the Federal Open Market Committee's minutes affect the gold market? In this particular case, I'm not sure it's going to have a significant effect. But the main way I think that the minutes could have an effect is if there's something that gives us some more detail about something that we weren't necessarily expecting. Such as, for example, I don't think this is likely to happen, but for example, if we found in the minutes tomorrow that many people in the Fed, they actually want to do a double cut this month or next month, then we might expect some positivity for gold. I would stress that's not likely to happen, but if that were to happen, then that might affect gold positively. Whereas if we had several members of the Fed in the minutes having said, no, we should not be having another 2 cuts this year, we only want 1 more, then that might have some negative impact on gold. In that, when we have the meeting of the FOMC, it usually doesn't factor in directly what all the various different senior members have said. It's just the chair giving a summary. So having more context for what all the other people think can be helpful, but ultimately, most of the time, it's not necessarily that important in the short term, unless you get a really big surprise from it. And hopefully, Mrs. Joyce, that answers your question. Thank you for the question. Yes, I'd like to say thank you, everybody, for the questions. And I would also like to plug Exness' socials now, because if you would like to know more about anything, pretty much, that's been discussed here, you can follow me on X, formerly known as Twitter, which is mstarkexness, and you can also follow Exness on X and on various other social platforms. You can also follow my account on TradingView and stream. It's been good, and hopefully not too many technical issues this time, but we'll discuss that with the social media team in a minute. Thanks very much, everybody, for all the active questions. That's really good. And I would just remind you, please, that none of the information here is recommendation to trade. It's not a signal. You always need to manage your risk and do your own research when you're trading. Don't just take my opinion as being fact because I'm wrong about various things. You also need to think about things for yourself. That's fine. Thank you, Mrs. Joyce, for being here. And hopefully my colleague Andreas will see you again next week at the same time, 8 o'clock in the morning GMT. And I will also be here the week after that at the same time again. So that would be the 21st of October, slightly before the Fed's meeting at 8 o'clock in the morning. And Andreas next week on the 14th at the same time. So hopefully join us again. And thanks for a great stream. Thanks for all your questions. And happy trading and responsible trading.